I'm not comfortable losing $600-700 a day. I am not comfortable allowing $500 or $800 or even $1,000 trade to hit TP. This is me being honest. This is me being open and transparent. Yeah, I'm trying to control the way I react to the feeling that either winning or losing a trade gives me. So I don't think that I'll learn to do that on larger accounts or larger amounts before I learn to do it on the smaller amounts. Because I'm completely fine with losing 100. But when it comes to something like 500 or 1,000, it's a different ball game, you know? But all these different indicators could help us make a better decision. So after all this price action came back down here and we had a close below this newly important low, I was like, great, fine. Price might actually want to push lower, but I need some type of confirmation, some type of better entry. And then I remember these fair value gaps to the left. Now, them boy never got retraced into. And I can start doing something different, y'all. Like, we can start going more places, you know? What is in the yard, in the house, on the road. We can just start touring around. But as you guys can see there on the screen, we almost at TP. Alright, welcome back to another video. And I hope you're doing amazing, as usual. It's Monday, brand new start of the week. It's before New York opening. It's currently 7:25 New York time, 8:25 in Guyana, and I just really wanted to open the camera and talk to you guys before today's trading session because we actually have a whole lot to discuss. We sort of discussed some of the things that we had to talk about thus far, but you know, I'm trying to make it as streamlined or systemic as possible so I don't confuse anybody watching or myself when I choose to rewatch my videos. But it's a brand new year. We are still working with a few brokers. The last broker that I mentioned to you guys was, I think it was AvaTrade and Hanco Trade. Is Hanco Trade? Yeah, Hanco Trade and AvaTrade. But recently I was checking out Black Bull's markets and somebody actually reached out to me as well from Black Bull Market, so big shout out to you on that. But I checked out their trading conditions. I actually opened an account with them. I deposited and I decided that I will do the $50 to $100 challenge on Black Bull first before trying any other broker because there are a lot of benefits, you know. All of the brokers have benefits, but with Hanco Trade and Black Bull specifically, I'm able to trade directly from TradingView, which is something I never done before. And I believe a lot of you are interested in trading directly from TradingView as well, you know. So yeah, I'm going to be checking that out, and it doesn't or it wouldn't be adding to the amount of accounts that I have since I already do my analysis on TradingView, and I have the other accounts on the web terminal on my laptop and the desktop, and I also have the MT5 just to like fine-tune the prices that I'm seeing for the web terminal. So I can still control the 6 other accounts that I have through MT5, but this one account here, which will make the 7th account, will be traded directly from TradingView. So yeah, that's some food for thought. So I did a calculation, and if I just risk $30 per trade moving forward on all of my accounts excluding the $50 account, obviously, if I risk $30 aiming for $60 a day, it's possible that if I win just 3 trades, then I would pass all of the prop firms challenges that I'm currently taking in 2 months. Is it worth it? I do not know. Is it something that I want to try? Yes. I actually journaled it. I don't know if y'all can see Jack Squat. I wrote down the things that I can do to help me pass the challenge in not necessarily a timely manner, but just in a manner that ensures survival. You know, I'm not risking 1%. I don't even think that I'm aiming for 1%. 1% would be what, $200, right? Right. So I'm not even risking 0.5%. I'm basically aiming for like 0.6%. So I'm risking 0.3%. And for a lot of persons listening to me say that, you might be thinking that's a bad idea. It might take too long. There's a lot of factors, right? But I've considered this. The benefit of doing something like that would be obviously reduce risk. So I get to stay in the game for longer. And personally, I am not in any rush to pass these accounts. I would also like to start developing this approach that could see me just be keeping these accounts long, right? If I intend to make it to the live stage with all of the accounts that I'm currently managing, I don't want it to be something where I did it in a month or 2 weeks, because the likelihood of me blowing the account that fast is also high, because I'd be trading with the same risk, I'd be entering the same setups, I'd be looking for the same things, and when I lose, it would be one large amount. When I win, I don't know what would be the amount. One of the main reasons why I decided to reduce the amount of risk that I'm taking per account is I'm not comfortable losing $600-700 a day. I am not comfortable allowing a $500 or $800 or even $1,000 trade to hit TP. This is me being honest. This is me being open and transparent. A lot of persons can do that. You could afford to do it, or you feel comfortable, you're patient, you're disciplined. You can see your $500 or $2,000 profit, floating profit, and just, okay, I know we're still gonna go up somewhere. I know we're still gonna go in my favor a little bit more, so I'll hold it. Me, on the other hand, I might not. If I can see $500 in profit and understand that this is across 5 accounts, that's $2,500 in profit, then it might do something to my mind, which might cause me to make some decision that in hindsight I probably wouldn't make, right? So if I'm risking $30 per account across 6 accounts, that's with $300. If I lose, I'm losing $300. It's a bit more easy to cope with, for me. This might not be you. You might be completely fine with losing that, and what I'm talking about doesn't even matter to you, which you don't even know how lucky you are, right? Well, not lucky. I'd say I call that discipline, just don't overlook it. But for the rest of us human beings out here who, to some extent, I don't want to say controlled emotionally by money. To some extent, we're affected emotionally when money comes into play. If we lose money, we feel an emotion. If we gain money, we feel an emotion, right? But for some of you out there, it's emotionless. You can gain how much ever, lose how much ever, and it does not affect you. I am working my way there. I'm trying to control the way I react to the feeling that either winning or losing a trade gives me. So I don't think that I'll learn to do that on larger accounts or larger amounts before I learn to do it on the smaller amounts, because I'm completely fine with losing 100. But when it comes to something like 500 or 1,000, it's a different ball game, So let's see how this goes. Let's see if this is another hack that will help. I'm still not looking at the trade section on my MT5. But the thing with the web terminal is, even if I don't want to look at the trade, I still will see it. So I'm gonna see how best we could work around that. But for right now, as I said, the markets, the markets are open. It's just, not New York open as yet. So I'm gonna be holding on. Probably gonna start editing some videos and just wait for New York open so we could get the ball rolling. I'm also gonna be going live with the team as well, so let's look out for that at 10:15. Friday close. So looking back in hindsight, it's a good thing that I closed it, save myself a little loss. But let's see what's going on. Once the market open, hopefully we find a trade and we can get right into it. And so we're back. I have a trade open, as you can see. I sent this out to the community as well, and this, funny enough, I was actually going over the previous 2 trades that I took with members of the premium community, and I was explaining to them the reason behind this entry that I entered a little bit early on Wednesday. It was at 8:30 New York time instead of 9:30 New York time, but I was explaining to them that In some cases, we do get an early entry, and then once the New York Open at 9:30 happens, we still around the same price range. So I still got to get the entry at 9:30, and the way this whole trade happened is pretty similar to this one this morning. We're already in this one, up in a good amount of profit, but like y'all know, the market could just decide to be like, hey, fuck it, I gain up, and go up. So we're still monitoring it, but it's the same idea. But yeah, when I'm able to drop down to the 5 minute, I can see a little bit of manipulation. And this is the thing, manipulation, distribution, and accumulation will not always look the same. You really got to be able to identify it when it's looking that different. And there's a difference between identifying it and forcing it. Like, if it's not there, then don't try to tell yourself that it happened, but still be aware of all the things that are happening. So right here, let me just extend the height of the chart so we could see it with a little bit more definition. So besides this fair value gap, actually two fair value gaps, one here and one right there, we have a high right there. It's too high. The one just leading to the other one right there. And right, you might be looking at that and saying, why would you even consider that a high? Well, ask yourself something. Does it have a lower candle to the left and right of it? And it's a high. The high only just appeared on the 5 minute, but it's still a high. So we have two highs over here. Then we had this big push down there. This was around like 3 some this morning. So in terms of old liquidity, it's not that old, but it's still not, you know, completely recent if we're looking at it on a intraday trading perspective or a scalping perspective. If we're looking at it on a day trading perspective, then yeah, it's the same day. It's the same day. It's not recent liquidity, but we're not day trading, you know. So we have that fair value gap right here. We have a push below this recent low, and then when we go back in time, we also have a fair value gap, an opening of a fair value gap. So this price action actually touched that fair value gap after breaking beyond this low. Then we have this price action that's pushing even further in that direction. I just really and truly want to record a video for y'all, bro, without all them extra. I can write a letter to the airport. They could change routes. It can even be more efficient to not fly this way, bro. But anyhow, we had all this confirmation that price might be looking to push lower, right? So we have this fair value gap, full close below these lows, which in the past was the beginning of a fair value gap. So it's saying that, at least to me, price does not really want to respect that previous fair value gap. So we pushed even further. We had even more impulsive price action, and then going back again at 25.25 is also another fair value gap. So there were multiple fair value gaps in a move to the upside, and now that price is pushing back down, we're, you know, touching each of these fair value gaps one by one, and some of them you're seeing a reaction to the upside in price, because once we got to this fair value gap, we had all this movement to the upside. Then once price reacted at that fair value gap, there's also liquidity resting below this fair value gap, which is no longer open. So it's possible that if price chooses to push beyond this point to the downside, we would be looking for the previous liquidity to the downside, which would be at 24.55. I actually put an alert on the screen. It's actually at 24.50, but I just want to be safe, because sometimes price likes to create relatively equal highs and lows, and yeah, I ain't never know. So I watched price action. I noticed that this fair value gap is still valid. These highs that are, well, I can say broken, because thank God I remember to talk about the highs. So these highs that were here before we get to the fair value gap, right? These highs, the first one right here actually got broken by this candle, and the second one basically got a relatively equal high, right? So this is a valid high that was formed before previous liquidity was taken or a fair value gap was filled. So this high, this almost insignificant looking high that you honestly can't even see on any other time frame besides the 5 and down, right? That high held importance, and that caused this low right here to also become important, because this is the low that was formed before this high was broken, and this high was formed before previous liquidity or a fair value gap was filled. So keeping all of this string of information in mind, because it really and truly helps us to make a better decision once we keep all the things that we had to track in a line and make sure that they're aligning, it makes a better decision. So we had this low that was formed just before previous liquidity was broken. So what we would want is, if price is pushing up, we don't want this low to be broken with a close below it. Price did all this and then came back, so it closed below this low that was farmed before this high was broken. So that might be indicating that price would like to push a little bit lower. Now, this is not written in stone, as we can clearly see on the price action right here that's going on live, but all these different indicators could help us make a better decision. So after all this price action came back down here and we had a close below this newly important low, I was like, great, fine. Price might actually want to push lower, but I need some type of confirmation, some type of better entry. And then I remember these fair value gaps to the left. Now, them boy never got retraced into. And since we had all this pushy uppy price action, or whatever the case, all this up and down price action, I kind of consider this leg of price to be consolidation. So I know it's very zoomed in, but still, if this happened on the larger time frame, we still want to drop down and actually see it occurring on the smaller time frames as well. So having this whole accumulation idea in my mind, then I'm now looking for manipulation. So if I am bearish, I would like to see the price go up before it go down. So where would I like to see it go up? Remember? Stay with me. Stay with me. Fair value gaps, brethren. The fair value gaps right in the history right there. And we just aiming for the beginning of this one right here, which is right where our entry is, which is right where price just nicked up. And if we put on the volume bar, just to see if we could get, I don't know, some type of extra confirmation or something, I don't know. If we should look at the volume bar of the candle, and this is the first time I'm looking at it, so I entered this trade with a little bit less confirmation, right? Admittedly, I didn't follow all of the steps, right? But this here, this wick candle is actually a bullish candle. It has a very relatively large bullish volume bar. It's like among the highest, including almost as high as this very large bullish candle that we had here at 950. So we have a very large volume bar that's almost as large as the largest candle for the day thus far, but the candle for that relatively large volume bar at a very specific area of interest is a wick. It's just a big wick and a very, very tiny body, and it's bullish. So that means if the information from the volume bar indicator and price action is anything to go by, once price got to this area right here, from where it opened to where it closed, basically from where it opened, the entire candlestick, well, I want to say the reach of the candle. In fact, persons might have been selling from this point, because if we drop down to maybe a 3-minute or a 1-minute, where we could see, oh, I don't actually have the volume across the 3-minute and 1-minute, the data is not as, to me, weighty, you know? So the information is not as, I want to say it doesn't carry as much weight when I'm reading the volume bar information on the 3 and 1 minute. But if we could pull it up on the 3 and 1 minute, it's possible that we would have seen, am I right? Great. Bearish volume once we moved from this area. So persons actually were waiting at this area as a point of interest to either sell or enter a sell position, or whatever the case is. So this information is indicated clearly by the volume bar. Even though I didn't use the volume bar on the smaller time frames or on the larger time frames to determine the entry for this trade, or to actually enter this trade or determine my exits, the idea was still the same thing. We still used all the other confirmations in the strategy. It's still a setup that I look for, and we followed all the rules thus far. Now, I could aim for the low at the bottom here, but I decided to just keep my targets between like 100 to 150 pips max, and my risk at 60 pips. Like I was explaining earlier in the journal, I actually documented this, I wrote it down, and I did my calculations. If I could just follow the system that I created, then I would be able to better track my results, improve, and basically make the process a little bit more easier for me. You know, I would just be able to refer to my notes, my results, and everything, and if I am slightly off, I would know why and by how much. So yeah, I'm gonna pause the recording for right now and come back and give you guys that update once we get to either take profit or wherever. But yeah, that's it for right now. It's Monday and it's looking like a good start thus far. Alright, so we're back and I can start doing something different with y'all. Like, we can start going more places, you know, what is in the yard, in the house, on the road. We can just start touring around. But as you guys can see there on the screen, we almost a TP. So yeah, we actually had to endure all this retracement back beyond our entry. So yeah, I was negative in this trade, but we're still holding it. So let me show y'all what it looks like on the prop accounts. I don't think I've shown you guys these prop accounts we in drawdown, but yeah, that's how much the profit is looking like right now. But we still won on this one. Hopefully we get to take profit soon. So yeah. I cannot make this shit up, bro. You seen this price action? Like, the last time I opened the camera I was here half an hour ago, and we're back at break even again on all the accounts. I mean, but yeah, still holding this one, and it does not look pretty. To be honest, these kind of conditions, like the one that we took on Wednesday, they just build your mentality to like withstand certain market conditions. And granted, not all of these trades that go up and down are going to eventually go to you take profit, but the fact that you're able to withstand the up and down movement is what's gonna actually allow you to hold more trades that would hit you take profit. So yeah, I'm still thankful for the entire trade, regardless of whether we hit stop loss or take profit. The fact that I'm able to hold it and withstand all these different price swings, and I'm not checking the trade section on my MT5, but I'm still able to see how much I'm in profit in the dollar amount when it comes to the web trader platform. So that's that. But we're still in this one. Just wanted to give you guys the update once we got back to break even. I'm monitoring the charts the entire time, so I'm editing, monitoring, and doing a whole heap of other stuff. So that's one of the benefits about trading. Whether you win or lose money, this is a career where you have a lot of freedom to do other things. So yeah, man, and come back and give y'all that update once we get to any of our points of interest. It was looking so good earlier. We didn't really take any liquidity on this move to the downside because this low right here is still valid, so it made a relatively equal low. Let's see though, let's see what happens. Well, we're back. Like, really and truly, I can tell you, I am glad that my risk is reduced. So I only took about like $25 loss across all the accounts, not in total but per account, which is still, you know, manageable. But this is a 9. I ain't gonna lie, bro. Y'all seen the price action, you've seen what I've endured, but I believe my main reason for losing this trade is higher time frame price action and the higher time frame in general. So I was actually selling after this very large wick to the downside on the hourly. Even though it wasn't at any significant areas of interest, price action was still saying that, hey, buyers are strong once we get below it. These kind of things happen. We can't force the market to always go in our direction. We can't force the market to take profit. And to some extent, I wanted to bring my stop loss to break even after we made that first retracement back to our entry point. So after this retracement, because I was in this trade from here at 10 a.m. and went all that way into profit, went beyond my entry point and went basically the same distance into profit before coming up. And even though it hasn't quite touched my stop loss or the area where my stop loss was placed, spread. Yeah, sometimes spread will take you out even if price decides not to. Regardless, trade closed on all of the accounts and Still not in that much drawdown. The largest drawdown amount is $300 on the 20K account. The others are at like 230 and 250. So we're still basically up, about 4 trades away from break even for the one with the largest drawdown, so still gonna be patient with it. I highly doubt I'll be taking any more trades for today, even though it's barely 2:15 in the afternoon. I still have other stuff that I want to take care of, and I'm just gonna let price do its thing. I really don't like price action for today with all this up and down movement. I just like it when we have a clear sense in direction, you know, in price. So I'm gonna wait until market conditions become a little bit more favorable for that type of movement. So without any need to keep drawing on this video and make it much longer, I'm probably gonna end it here and gonna have to check in with you guys tomorrow once I get a brand new approach towards the market. You know, we had an L today, we just accepting that L and moving on. It's a very small L, you know, $25 per account. And this damn popsicle man coming back again, and I ain't able to pause again because I had to wait for like 3 minutes before it passed the first time, so I can just call it there right now. And if you made it this far in the video and you still haven't subscribed as yet, do you buy a salad and please hit the subscribe button. And while you're down there, just smash on the like button as well, because it helps in getting the video recommended to more persons who might also be interested in this type of content. So that'll be all for this video. Definitely gonna catch you guys in the next one. Remember to like, comment, and subscribe. Peace.